Choosing the wrong UK bank as a non-resident can cost you weeks, sometimes months, and in many cases, a straight rejection. Many founders assume that once a UK company is registered, the bank account is guaranteed. That assumption is the biggest mistake non-residents make. In this video, I'll clearly explain the difference between UK fintech banks and traditional UK banks for non-residents, how they actually work in 2026, who each option is suitable for, and how to choose the right one before you apply. UK company formation and UK banking are two completely separate systems. Your company can be approved within 24 hours, and your bank account can still be rejected. Banks do not care how fast or easy your company was registered. They focus on risk, compliance, and clarity. Choosing the wrong type of bank at the wrong stage increases rejection risk, delays operations, and creates unnecessary compliance friction. That's why this decision matters far more than most founders realize. UK fintech banks are digital-first institutions built for online and international businesses. For non-residents, fintech banks usually offer fully remote onboarding, faster reviews, and clearer digital processes. They are often the most realistic starting point for overseas founders because they are designed for modern, cross-border business models. However, fintech does not mean low compliance. These banks still apply strict AML checks and reject weak applications quickly. Traditional UK banks are high street institutions with conservative onboarding policies. For non-residents, they typically require more documentation, longer review timelines, and in some cases, physical presence or strong UK connections. They prioritize stability, long-term relationships, and predictable business activity. This makes traditional banks harder to access for early-stage non-resident founders, but very valuable later once a business is established. Here's the practical comparison. Fintech banks are faster, fully online, and more flexible for non-residents, but they monitor activity closely and can restrict accounts if risk changes. Traditional banks move slower, ask more questions, and set higher entry barriers, but offer stronger long-term stability and advanced banking services. This is why many non-residents start with fintech banks and transition to traditional banks later. Neither fintech banks nor traditional banks approve everyone. Most rejections happen for the same reasons across both types: weak proof of address, unclear or inconsistent business activity, poor source of funds explanations, edited or mismatched documents. Rejections are rarely about nationality, they are about unclear risk. Fintech banks are usually better if you are a new non-resident founder, running an online or international business, and need faster access to payments. Traditional banks are better if your business is already operating, has transaction history, and needs higher limits or advanced services. There is no universal best option, only the best fit for your current stage. The smartest strategy in 2026 is simple. Start with a realistic fintech bank. Prepare documents properly. Keep transactions predictable. Build clean banking history. Once the business stabilizes, transitioning to a traditional bank becomes much easier. Trying to force a traditional bank too early usually leads to rejection. The decision between UK fintech banks and traditional banks for non-residents is not about easy versus hard. It's about timing, preparation, and fit. Non-residents who choose strategically, instead of emotionally, avoid rejections and scale faster. If you want the full written comparison and step-by-step banking guidance, check the link in the description. Subscribe for more clear, non-resident UK business guidance.